Last year was the first year that we made a step back. 140 plus million people fell back into energy poverty because energy had become too expensive.
Hello, I'm Ed D'Agostino, and today I speak with Jan Stewart, global energy strategist at Piper Sandler. Jan and I cover the future of nuclear energy, investing in uranium production, what Russia has done to the global energy supply, and his forecast for the U.S. economy and oil prices. Before we start, please do me a favor and show us your support by subscribing to our channel. We're so close to reaching 20,000 subscribers, and I would love for you to join our community. And with that, let's get started. You know, I usually think of you in associating with oil and gas and petroleum products, but something that I've been watching lately that I find really interesting is this investor interest in uranium. Couple that with an environmentalist interest in nuclear, of all things. I mean, talk about paradigm shifts. What do you attribute to this interest in uranium stocks and nuclear in general? And what's the time frame? Are people excited too early?
You know what? It is so cool that you bring that up. One of the reasons is, as you can tell from the hair, I was around when TMI happened, when 3 Mile Island happened. And I'm watching on Netflix, I'm on episode 3 of a 4-episode series on that whole TMI accident, but even worse, the communication around it. And nuclear scientists and the nuclear industry as such, they talk about pre-TMI and post-TMI. And this is like late 70s. Since then, we have completed exactly one greenfield nuclear power station in America, right? That thing that came online literally a month ago. Wow. Roughly 4x over budget, both in terms of time and money, right? It, in other words, takes that long for a relatively not so bad traumatic event to reseed in the public mind far enough so that you can again begin to contemplate, actually, that's really cool technology. We can and should be doing this, right? Finally. Okay, go back. Another anecdote. We had in Europe, where I grew up, every political party would be anti-nuclear. It would be one of the few things you could agree to, right? And again, that was after TMI, 3 Mile Island. That was after the Cold War standoff of the SS-20s that the Russians had, and we're going to put Pershing rockets to the other side. That is when the German Greens were born and began to sleep in front of nuclear power stations, trying to force them to shut down. That same Green Party that is in the German government now, that is in Europe blocking investments in nuclear energy, right? It is still there. Then you have, of course, Chernobyl. Then you have Fukushima. So the public impression, the public angst, on the one side, or the public belief in nuclear, to me, is a little bit like when you have a garden, right? You want sunlight, otherwise nothing's going to grow. And we haven't had sunlight on nuclear in a very, very, very long time. And we're finally, and I think your investors are right, you're beginning to see the first rays of interest in nuclear as an investment proposition, not as a bad joke. The Simpsons on TV is the longest running show on TV, right?
Right.
And still going. No, it's happening now. There is fierce interest in it. In terms of what we talk about ourselves, we probably need to see one more technology tweak on the most promising aspect of this, which would be small modular reactors. Why small modular reactors? Because right here, right now, the proposition of a utility scale, call it 1 gigawatt plant, building one of those, that is tens of billions of dollars on that need to be committed for a construction time that is seriously difficult to quantify, with attached to it an unlimited, literally unlimited insurance liability to do with, you still don't have a solution for your nuclear waste, right? So here in this country, I would argue we need Yucca Mountain. I mean, I'm pretty sure, Ed, you remember what Yucca Mountain is?
Yes.
We need a place to put that stuff. All the stuff that is sitting in in very, very large swimming pools in all these nuclear power plants that we have, that is highly radioactive stuff that needs to be secured someplace. Well, the best way we can secure it right here, right now, is to encase it in lead, envelop it in glass, and sink it in a swimming pool on site, right? That's not a great solution. So Yucca Mountain would help. The government would then also want to, at the very least, ring fence commercial liabilities so that the industry can go to work. The industry is not, and we talk to utilities all the time, the industry is nowhere near wanting to consider new nuclear power plants of the big variety. They are seeing the potential for small modular reactors. What are they waiting for? It's the preferred design, because these things would work because they're much smaller, so your project costs are much lower. But eventually, what is the beauty of that whole idea is that you would build a whole string of them. And to do a whole string of them, then you get into advantages of scale. But you need to agree on a design. You want to make a whole string of the same ones, not 1,000 different ones, because then you lose all your advantages again. So we're still in the, oh, mine is better than yours phase. We're still in the, well, we don't know which is the best yet phase, or which is which is the best, which is the most commercial, which is the one that we all like and can subscribe to, and which is the one, most importantly, the government or the feds can agree to is a good solution and is willing to ring fence liabilities around.
So everything that you just said, Jan,
I talk a lot. Sorry.
No, but I think in terms of like every element that you've just mentioned that has to happen before we actually start siting and breaking ground, let alone breaking ground, right? It seems like there's 5 to 10 years left. Is it that long?
Yeah, optimists like me will want to shorten that 3 to 5, 2 to 5. There's a lot going on, right? There's even some really serious private money behind this. Bill Gates and his foundation are among the most prominent of those. We know, in fact, we encountered 4 years ago, right before the pandemic in 2019, there was already one whole entire hedge fund dedicated to nuclear.
Wow.
2 guys, they know an awful lot about it, roll over, they figure they can bridge that gap with playing the commodity and the processing behind the commodity, right? Uranium. That may be true, but betting on nuclear construction, that still seems a little ways off. I mean, right here, right now, who are building nukes in, I don't know, a little place called the United Kingdom, that would be a Chinese outfit. It's probably not the kind of a thing that we want to recommend to our clients at this stage, on the kind of it being Chinese, very simply put. There's a Russian outfit that will build you a power plant if you're in the Middle East. Probably not that great of an investment opportunity either. The French commercial power plant builders, who also have a pretty good record, they are in the middle of reorganizing. And being renationalized. So at least parts of that industry are being renationalized. So in terms of outright construction of power plant type outfits, there aren't that many out there who have a line of sight of doing stuff, sadly. So yes, 2 to 5 years, best guess.
So these small modular units that you mentioned, is the logical place to put them next to an existing plant?
Very good question. Possible, although you should be able to put them in different places as well, right? I mean, Maybe you can put them on where there were other utilities before, a coal-fired power plant, so you have the grid proximity. You'll need to do a lot of confidence building before you can put them maybe on coal or gas plant sites. I'm not sure whether communities would be happy to have them sitting on existing nuclear power plant sites. I just don't know, haven't done that work. But in theory, one of the advantages is that they need less of everything, that they are just smaller, right? The technology behind it is really not that difficult. It's really more about agreeing to what is your most favorite design. I mean, the technology behind it, why I say it's not that difficult, is because we have small modular reactors in, 11 out of our 11 aircraft carriers, in 50 out of our 50 submarines, those kind of things, right? So, and Rolls-Royce Machines is one of them that is in the UK, pretty far ahead with that, because it has the same military experience with these things, or things that look very much like it.
I spend a lot of time focusing on things like cybersecurity and non-kinetic terrorism risks, or sort of small actor risks. We've heard reports, I'm sure you've heard about them too, electrical substations getting attacked in the U.S. It seems like everything related to nuclear that has a negative connotation has been glossed over lately. And I worry that we haven't solved for some of the obvious potential issues. Do you think that issues like that are being addressed?
Yes. Since 9/11, everything to do with nuke has been on the most obvious to get attacked list, right? And the feds and state authorities have done their level best, whatever that means, Ed, in doubling security or tripling security around those assets. The threat is real. I agree with you. We've all seen the reports. I mean, whether it's Russians, North Koreans, or Chinese entities that did things to entire networks, including the Colonial Pipeline, doesn't really matter, right? None of those three have our best interests at heart, to put it mildly. There's other threats. As you know, many of the grid transformers that have been attacked. Sadly, many of those are ask anybody in the FBI, what is the most damaging terrorist in this country? It's the homegrown, dissatisfied white guy, right? With a rifle.
Yeah.
Right. So that's not great, and it is something that we've now, the nuclear. Doing damage to a nuclear asset is that's the nightmare of everybody in law enforcement in this country on the federal, state, and local level. So we are acutely aware of it. How good we are at protecting it all, Ed. So far, so good is pretty much the, knocking on wood, the only thing we can say, right?
Can you frame this a little bit in terms of both global and U.S. power generation? How big of a factor is nuclear today, domestically and abroad? And what do you see, say, 5 to 10 years from now?
We have a chart that we like drawing, and we draw it from the BP statistics, the BP World Energy Statistical Handbook, I believe the official title of it is, lives on their website. I'm happy to advertise for it because it is just such an enormously cool resource. So they will, from that database, you can draw a really cool little chart that tells you what have we been using to generate electricity with, right? Hydro, nuclear, wind, solar, oil, gas, coal, all these primary energy feeds into electricity. And the short answer to your question, we are using today around the world, sadly, far too little nuclear. Nuclear, when it when it began in the late 50s, but really the early 60s, the what we like to call the adoption of nuclear is far faster than anything else in the world before it or since, right? Because it is that good at generating electricity, that it is that relatively straightforward, right? And everything, it was a beautiful parabolic incline all the way to, okay, you guessed it, we talked about it, TMI, right? And since then, we all have seen the adoption rates of solar and wind, which are growing double digits in compound annual growth rates over the last 10 years, has been accelerating. And it is absolutely wonderful how fast those things are managing to contribute to this dire need for more electricity, right? But nuclear has greater potential. It is really that simple. And it is really that simple because a nuke is on 24/7 until you have an annual maintenance cycle, which is measured in weeks, or refueling cycle, which is measured in weeks. All of which is done and proved with 1960s and 1970s technology, right? Every single plant out there up until the last up until the last 10 built by the Chinese is from those original designs. Improved upon, to be sure, but not conceptually a whole lot different. So we've proved all this stuff, and it's on 24/7. Wind and solar simply cannot do that. So you don't, with nuclear, have this utility scale storage issue that you have with the intermittencies of wind and solar. So it's great for baseload, right? And then you supplement it with the other stuff, and Bob's your uncle. And the country that did that is France. I mean, France literally did this. Inside 15 years, weaned themselves off of 100%, what do we call it again? Fossil-fueled thermal electricity generation, and achieved 75% of its electricity provision with nuclears. 60-odd nuclear power plants, which they built in a time frame from the late 60s all the way through the early to mid 80s. You can literally replicate that. The Chinese are now on their way to doing that. It's not going terribly fast, but that will accelerate. They brought online their own homegrown, home-built commercial plants only in the last 2 to 3 years, and they will accelerate that build-out. We can do something similar to that, to what we did in the 60s and the 70s, all over again with much better plants.
Obviously, the reason why I think the environmentalist crowd is so hot on nuclear is the zero emission aspect.
Yep.
We've got a world where there's roughly 8 billion people in it today, where
Yep.
the latest projections I saw is that we'll probably plateau around 11 billion. So a growth of 3 billion over the next several decades. The vast majority, in fact, all of that happening outside of the West, in emerging and frontier and developing economies. And the question I have for you is, do you think nuclear plays an outsized role in those parts of the world? Because, the U.S. or pick any Western country, we can get as clean as we want. But if we're going to increase global population outside of the West to the tune of 3 billion more people, and those people deserve, I would argue, to have the same chances that we did as an economy to develop. And we did it on the back of petroleum and coal. We don't want to see them do that, but I don't think it's right to deny them the opportunity to grow a middle class and develop as an economy. Is nuclear able to fill that gap?
No, because capital formation, you and your team know more about that than I do. Capital formation, business cycles and such, it's out of reach, right? It's too expensive. And you don't, even if you're a rich place like Saudi Arabia, you still need to agree with the purveyors of that technology that you're a stable enough country and a non-threatening enough country that you would be allowed to build out that nuclear supply chain, right? I mean, that's one of the conditions literally on the table right now on the part of Saudi Arabia for Saudi Arabia to recognize the State of Israel is that it wants America to give it the green light to develop its own nuclear supply chain. Fine. Even if the reason that the South Africans were able to build their own is because they put a whole national effort against it when they were under United Nations sanctions. Right, when it was during the apartheid regime. Brazil built it out in the 1970s because there was the opportunity to do it. They were successful. They built 2 of them with the help of, I forget who it was. I don't know if it was the Americans or the French who helped them with that. But since then, very few emerging market economies have been able to get the wherewithal together to build out their own nuclear power. Are we going to do that? Are we going to subsidize the building out of nuclear power plants all over Africa? That's probably going to take a little longer, right? Might not be a bad idea, but I don't see the IMF or the World Bank as yet even suggesting that, because we're still not in the full acceptance of this whole idea that nuclear is good, right? I mean, even the European Union, which I referred to earlier, in its taxonomy for the new European Union energy ecosystem, is not clear that it wants nuclear to be part of it. Because in Germany and in Austria and in a little place called Luxembourg, there are significant political forces who will hold up the admittedly small risk, but non-deniable risk, that something goes horribly wrong. And when it does, you have your Fukushimas, you have your Chernobyls, right?
Yeah.
Note that I didn't mention 3 Mile Island because in the end, not that much went wrong on 3 Mile Island, but it was an abject public relations disaster the way it was handled, and there was an accident there. That was anyway. You get my drift. There is a political hardcore, even in a place like Europe, that is against it. There are many economies in Europe, even, where you're now thinking that we should bring it back. But that's a very far cry away from us subsidizing the building out of nuclear power stations across emerging market economies in Africa or in Southeast Asia or in Latin America. That said, on a global scale, it would help a great deal if China is successful at building out the nuclear fleet that it endeavors to build out, if India can be persuaded to forego the full development of its coal reserves and instead builds out more nukes and wind and solar, it would help a great deal if other big emerging economies, such as maybe Indonesia and such, went nuclear on this in a peaceful way, not went nuclear in a bad way. It would help a great deal. I think it is part of the what we subscribe to, Ed, is that the energy problem for the world, you alluded to it earlier, there is something called energy poverty already. Last year, the International Energy Agency documented that last year was the first year since they began measuring this whole thing, energy poverty, last year was the first year that we made a step back, that 140 plus million people fell back into energy poverty because energy had become too expensive. Think about what the Russian invasion of Ukraine did to gas and coal prices. It made it so that Pakistan, for instance, couldn't afford to buy LNG anymore, didn't have enough coal, and the lights went out, literally. From the objective of simply providing energy, nuclear should be part of it, and if it must be, then it starts here and in Europe and in China and so on, and then eventually you get to other parts of the world.
I want to make sure I have time to speak with you about petroleum, but before we get to that, looking at this from an investor's perspective, I've been doing a little bit of work on uranium and looking at various ways to invest in nuclear. And, really the only, you can go with utilities that have nuclear plants, companies that have nuclear plants, or you can invest in uranium miners, essentially. These miners, basically, they were going nowhere until about December 2020. And what I'm looking at is VanEck uranium ETF.
Yep.
So in December of 2020, prices started going up considerably and kind of reached a new plateau, roughly 2 to 3 times where they were. This year, there was a low in those stocks in March, and since then, they're up about 30% off their lows. So these are pretty big moves in uranium, and it's got me intrigued and interested, but everything that you just said makes me think there's the demand for uranium isn't moving up in proportion to the stock prices yet. Is that a fair statement? How would you look at it?
I think that is fair. I think it is fair when you look at demand. I think that one of the reasons that you get these big moves is that there are issues on the supply side. Processing of uranium is one of the bigger processing facilities that many, even American plants, if I'm not mistaken, depend on, sits, of course, in Russia and or Ukraine. There aren't that many places in the world that do the processing of uranium into utility grade or reactor grade material. Number one. There's always a question, number two, about how much uranium will be made available by the DOE, the Department of Energy, which is in charge of recycling weapons-grade uranium from scratched ICBMs and other parts of the Department of Defense's arsenal into something that utilities can use, right? So it's a supplier, effectively, of utility-grade uranium. I do not know what that supply of that from that corner is, Ed, because I simply haven't looked at it. And then there is the notion that we're going to get more demand for utility uranium from the new plants that are being brought online. There are new plants being brought online. I referred the Chinese plants. There are 1 or 2 European plants that have started up, if I'm not mistaken. I want to think of one in Finland or Sweden, I forgot. There is the one in America that started up. We have some retirements, but there's this notion that we're going to get a few more new plants being brought online, and that adds to demand. But there's a supply piece of the equation as well that may be behind some of those moves that you cited earlier. We don't look at uranium is one of the few things that we don't look at on a weekly or monthly basis, right?
That in and of itself is very telling. Right?
Yes, that's right.
It's very early.
I think that's fair. Yeah. I think that's right. That's simply still early.
Look, I think you have one of the most interesting jobs in finance, being an energy analyst. I mean, you have to take so much into account.
It's
the geopolitics of energy are just they're just fascinating. So let's talk about oil and petroleum.
Sure.
You've got China slowing down. You've got OPEC restricting supply. You've got inflationary pressures across the globe.
Yep.
What's your outlook right now for oil and gas prices?
Let's contrast today with about a year ago. We were more bullish oil a year ago. We thought that 2 things that are different now. We thought we were going to lose a lot more Russian supply than we are ending up losing. There's simply not that much loss from Russia. That said, we do think that Russia is in decline. We estimate that decline to be order of magnitude negative 3% per annum. So in round numbers, if it's an 11 million barrel a day upstream, that's the better part of 350,000 barrels a day or so every single year that would come off. And that's also how we explain that the Russians are quote unquote contributing to the supply restraint. We think that's a function of their slow decline rate. A year ago, we were afraid that the embargoes that the European Union had put in place would effectively shut in a large chunk of Russian supply, 1 million plus barrels a day. Didn't happen. A year ago, we thought that demand was going to perform better than it so far has. So what we see is, number one, in the interim period, last winter, we had an abnormally mild winter around the world. That made a difference of, again, right? I mean, we're talking about an oil market that's about 100 million barrels or so. We're talking about in winter, you can lose the better part of 500,000 to 1 million barrels a day of demand from weather in a given month. But we did that for 2 months, at the least 2 months. Then we've been in this nagging sort of industrial recession around the world. Talk to anybody in petrochemicals, talk to anybody in machinery type stuff, and they'll all talk to you about, well, industrial production hasn't grown as much as trend. It has been performing below trend in Europe, here in America to a lesser degree. China has recovered consumer demand, but it hasn't really recovered from an industrial production perspective, nor has everything connected to China. So globally, I don't think it's unfair to argue that we are in the middle of this at the very least, industrial recession. And that is not great for oil demand. Think of things like petrochemical feeds such as naphtha, these esoteric light liquids such as ethane or propane that go into chemical crackers, and there's less of that stuff demanded, literally. We think that then there's a few more specific economies that haven't been doing all that great. Think of, I said it earlier, Pakistan or Egypt or things in Africa. Strangely, the Middle East was doing rip-roaring well, and in the second quarter of this year has been underperforming. So the global economy is hurting in different places, and we see that in select places in our oil demand. So if you ask me why you're less bullish than you were a year ago, it's because demand is not that great. It's not bad, but it's just not as good as we thought it was going to be. And I'm getting, number two, these Russian supplies that didn't fall away, and that means that I have less of a sense of crisis. So I don't need to go to 120 or 130 or 140 dollars a barrel oil to solve a crisis that isn't really there. I just have this nice, wonderful, slow grind. We learned that when WTI prices, American prices, fall below $70, the American shale, the American upstream, just doesn't feel that good anymore. It'll function, but it won't grow. It will add a little bit of debt. It will still pay its dividends, which is kind of new, right? I mean, the American independent oil producers being responsible stewards of shareholder capital is not something you would ever have accused them of in that whole period that they, from 2009 through 2019. But now they're legit investable companies. Kind of interesting. But what I'm saying is that American oil production is growing well, really well, in that sort of $75, $80 WTI neighborhood where we now are, and where we have spent quite a bit of time in the last 24 months. So America has been growing its oil production just fine. And maybe that is good enough. So that's a long-winded way for saying that we kind of like oil prices where they are. We had forecast that we would have $85 Brent, $80 WTI in the second half of this year. To be fair, we adjusted our forecast down back in, I want to say it was April, May, from 100 plus to now, let's just stay in the range. The range is defined as $70 Brent to $90 Brent, so WTI terms at 65, 85, and we're going to spend the second half in the upper end of the range. upper band of that range. And that's going to extend out into 2024. Long-term medium price, mid-range prices, or long-term normal prices, 75 for WTI. That's our expectation, which some would argue, oh, dude, that's so boring relative to 100 plus and all this excitement. And we say, well, actually, the world seems to go around on the supply side with that kind of level of price. You see capital formation behind the international offshore. There's loads more drilling. There's even some prospecting in that offshore, not just in the Middle East, but also offshore Brazil, offshore West Africa, North Sea even, Gulf of Mexico, of course, quite a bit. So there's good activity that has been re-energized at these price levels. And if we're lucky, we don't need to go a whole lot higher than this. We still think that globally, we talked about a lot with nuclear, we still think globally the world needs much more energy, and we are not, at $50, we're not going to be able to do that. At 75, 80, possibly if we're lucky, we still need to find a solution for Europe and its natural gas, so that equates for the moment to relatively expensive liquefied natural gas, which is a bit of a boon to American gas producers. We don't expect that to go away. But oil, what can get us to change our mind? The downside risk really is a recession here in America. As you know, I live in the house that Nancy Lazare built over at Piper Sandler. Nancy is our chief economist. She is persuaded and has been banging the table consistently that America is headed into a recession starting in the fourth quarter. The recession will be relatively not that mild, but also not as bad as the great financial crisis. In unemployment terms, 5.5% to 6%, some point the first half of next year, and then things maybe trough out around the middle of next year, is our base case. And with that, we don't have very high expectations for oil demand because of America, because of Europe, because of now China. We think of oil demand as like, there's still a bit of recovery to do, 1.5 million or so, 1.7 million for next year is about it. So you get over the 2019 levels finally late this year, second half of this year, and then through next year. But demand would have to surprise very significantly to the upside for us to get terribly excited about higher prices. The second thing would be if we find that a piece of that Russian or Middle East supply falls away for whatever reason. Russia could be that we get more intense sanctions, something bad happens in that Ukrainian war where we feel more obliged to put the screws, so to speak, on the Russian economy, which, we said we wanted to do that in 2022. Europe wrote laws that would have banned European ships and European insurance outfits from assisting in the exports of Russian crude. And then America built a giant loophole to make sure that we wouldn't lose that oil, right? And we wouldn't get some mad inflation out of it. So that's a choice that we made. Okay, paint me a scenario in which the war gets a lot worse, and I'll paint you a scenario in which we may have to turf more Russian oil out of the equation, and that will come with higher oil prices. Possible, not unimaginable. We think, in fact, that and I'll wrap this up, Ed. We will think, in fact, that the geopolitics are scary, and that is bearish in the first instance. The world will be growing faster economically if there was greater trade and fewer barriers to trade and ownership between China and America, or China and the West, whatever you want to call it. And we're most likely, we're headed down a path where we're going to see more barriers to that trade, more disentanglement of supply chains, meaning more inflation, less growth, less trade. Right? That is relatively straightforward, and that is somewhat bearish, of course. And then you leave aside the risk of what those people in Washington call kinetic phases of conflicts. I mean, we used to call that war, right? There's like war risk out there, palpable. I mean, there's more and more evidence that China is actively supporting the military side of the Russian conflict with Ukraine. That's not a good thing, right? We seem to have very little leverage over the Chinese in that regard, or we don't want to use all the leverage that we do have. Okay, well, does that change if our government changes? We have an election next year. We have an election in India next year. We have Xi Jinping that is confronting an economy where wholesale change is now in the works. The old model that he always knew is not going to work into perpetuity is now being changed. Okay, the new model, how good is that at growing the Chinese economy or not? So there's lots of change out there, which comes with both bullish and bearish risk. We think, in fact, that there is pretty symmetric risk around our forecast of that, like I said, 85 Brent, 80 WTI, maybe a little bit higher next year, but not much. So that symmetric risk ranges from really mundane stuff to really stuff that you don't want to think about, or at least that I don't want to think about, which is really bad stuff. And then I'm not talking about Taiwan. I'm much more worried about some confrontation in the East or the South China Sea. We don't believe that China is looking to provoke a war with America over Taiwan. We do think that China is going to want to demonstrate that it owns the East and the South China Sea, and that there's far more risk around some kind of confrontation there. But things in the Ukraine could get a lot worse. It's very, very unclear to us what would compel Vladimir Putin to come to the table, or what would compel, for that matter, Zelensky to come to the table.
You covered a lot of ground there.
Sorry.
No, it's fascinating. Like I said, I think you have one of the most interesting jobs in finance. It's funny you mentioned your team's call about a recession. Just in the last few weeks, it seems like most of the majors on Wall Street, the major banks or the research houses are unwinding their recession calls. And I was speaking with my colleague Jared Dillian about how this makes me think, oh, maybe we actually are going to have a recession.
Yeah, we're afraid, and that's you probably are familiar with Nancy and her insanely thorough modeling efforts.
Yes.
And then Jacobina on her team gives it a slightly different angle and comes to the exact same conclusions. Benson Durham on our team is not optimistic. So, yeah, we are that house that isn't terribly optimistic on the economy.
I want to ask you a little bit about the Strategic Petroleum Reserve in the U.S.
Yep.
You see a lot of calls for the government to refill it. And my question for you is, does it even matter anymore? Like, is it even relevant? Do we need it?
That's a really good angle, because what I mentioned earlier is the one of the things that made us less bullish is growth of oil production here in America.
Right.
Fact is that the weekly data and the monthly data are mad underestimating the level of production. The monthly data, most likely we're going to know on August 31 when we get the annual revisions of that. But it strikes us that even as the monthly data revised up the level of production from the weekly data, we're probably still not quite there, because there's a huge adjustment factor, right? That's a long-winded intro to saying that America and the American shale industry is the most significant revolution in oil and gas of the last 100 years happened in the last 15 years. Right? What that allowed us to do is provide very, very low cost energy to the American economy with the shale revolution for gas. With gas, we were able to meet our Paris targets, the only big economy to do that, by lowering our relative CO2 emissions, because we sidelined coal. Very simple. Coal was 45% of American electricity generation. It's now barely 17%. Gas is north of 40%, and that is because of fracking. Very simple. And there's endlessly more gas where that came from. Then we did the same exact thing for oil. So America on its own is a net energy exporter. America is a net oil exporter on its own. Then you have a little something called Canada, which is exporting the better part of 2 million barrels a day to no other place than America.
Wow.
Through America, right? So if we assume that we stay on very good terms with Canada, then North America, not even counting Mexico, is a huge net exporter of oil. So the legit question is, why do we need that SPR, right? Well, we built it, we paid for it, so why just squander it would probably be the better question. Well, what do you mean with squandering? We could decide that it's of strategic importance, not only to us directly, but to us as the center of a big system of alliances, which we call the West. The rest of the West, call it Europe and Japan and Korea, are dramatically dependent on imports of any and all kinds of energy. And just if we want to be of more value to them because we will need them, could be a valid argument. That's the argument that President Biden is quite literally the figurehead of, right? And the American establishment has had as a strategic interest its system of alliances. Well, oil is a piece of, if you want to get rude about it or crude about it, a piece of leverage over your allies. Right? So why squander that SPR, even if you yourself, strictly speaking, don't any longer need it? It is still terribly helpful and of great strategic value at a time yet to be determined that hopefully is never. It's called an insurance policy for that reason, and it needs to be of a certain size. Now, fact is that we have used big chunks of the SPR as revenue raisers, for bills that we have written that cost money. So a good chunk of the SPR was literally already sold. We didn't physically move it. We moved a piece of it last year. We're going to move another piece of it between 2028 and 2032. Left now is about 360 million. We could rebuild some of it. If oil prices were to fall, that would be helpful. It would provide some support for the industry that we kind of need. If we did that, let's say that we bought some of it back when oil prices go below $60, WTI goes below $60, which is what the White House has floated as a benchmark for its policy of wanting to rebuild some of the SPR. Next year, Ed, if let's say we're wrong, right, and we don't get that bad a recession, demand is kind of all right, a few more supply issues, the Saudis, surprise, are a little bit slow in giving oil back to the market, prices go up a little bit, and next year, President Biden, but really the Democratic establishment is up for election, and gasoline prices threaten to go to freaking $5 all over again, right? He has the SPR to play with, to put it very bluntly. So there's two-way SPR risk for the market, but the SPR as such, really, we ourselves don't need it anymore because we are exporters of oil.
Great insights. I didn't even get through half of my questions for you. That was fascinating. So I'm gonna ask that you come back in the not too distant future, and we'll get into decarbonization and some of the efforts that maybe the majors are investing in right now. I'd love to get your thoughts on that down the road.
I'd be happy to. It's fun to be with you. I love talking about the stuff, as you can tell. So you call, we'll be there.
For more on geopolitics, check out this fascinating conversation with Dr. Pippa Malmgren.